Welcome back. You're watching Market Fatafat on ET now. Let's bring on board Shana Shah, president at Shelby, joining in with us. They reported their numbers. It was a mixed Q3 that came in from the company. Margins rebounded to about the 20% mark. Thank you so much, Shana, for joining in with us. And margins, let's start by talking about that. That's seen a decline sequentially. And from 22% in Q2, we're seeing it at 19.4% in Q3. Was it because of the seasonality, and can we expect you to bounce back of about the 20% mark in Q4 and beyond?
You're right. There is a seasonality factor in Q3 across all the corporate hospitals in the country, and the cold work, the planned surgeries are relatively, comparatively lesser than Q1 and Q2, and which again picks up in Q4. Having said that, we are quite happy with the performance of the company. There has been a 25% EBITDA growth on a year-on-year basis in this quarter. This helps us to kind of get to about a 950 crore kind of a top line on an annual basis with more than a 200 crore kind of EBITDA. So it is going to be that year for the company where we will be doing north of 200 crores of EBITDA and north of 100 crores of PAT.
Good afternoon, this is Cheryl also joining in the conversation. You actually recently acquired majority stake in Sanar Hospitals in Gurugram. If you could tell us, this actually in fact marks your entry in NCR region. So where are your competitors already have a strong base, and how do you assess this market that you've already entered right now? Also, if I could add to that, from this hospital, what's the incremental revenue potential that you foresee now?
Yeah, so your voice was cracking a little bit, but I think you were asking about the Delhi hospital, the hospital in Gurgaon. So yes, it's an important, significant step in the company, and in fact, we are happy to announce it's a 180-bed facility. 130 beds are operational, and from the competitive landscape perspective, I want to share with you that we are already doing 70% of international business in this hospital. So it is already doing really well, and it does one of the highest number of bone marrow transplants, liver transplants, kidney transplants in Gurgaon. So we are quite positive, and with the ongoing run rate, it is likely to contribute about 120 crores over the next 12 months in terms of top line.
What we also understand that you are also looking for expansion in the Pune region. Any updates on that front? Could you share any details over there?
See, Pune is an important geography for the company. So Pune and Calcutta are the next two kind of geographies which have been kind of marked for further growth for the company. So we are talking to a couple of people there, but nothing significant to announce at the moment.
Right. How do you see your ARPOB and occupancy levels panning out, especially in the quarter that we are in currently? That's the Q4.
Yeah, so we do believe that this quarter or Q4 will be the best quarter for this financial year, and both the hospital business as well as the implant business will be firing on both cylinders. So we are kind of positive that this will be the best quarter in this year for us.
Okay, and any number you wish to share for the ARPOB and occupancy expected in Q4?
Well, I can tell you that we will be doing, about 225 to 240 crore kind of top line. That's what, we believe we will do. ARPOB will continue to be in the same range, as it is right now. And we are looking to add about 60 crores kind of EBITDA, in this quarter.
Right. You also guided that Nashik Hospital, which has about 146 beds now, will be commissioned in late FY24, where we are in currently. Is that plan still on track?
Well, the Nashik Hospital is basically a kind of a JV between us and one of the real estate developers in Nashik. There has been a delay on, their front, where they are supposed to kind of make the hospital building and infrastructure and hand it over to us. So, they've not handed it over to us, and there has been a delay. But I think the moment they deliver it to us, from that point of time, we believe that in a matter of 3 to 4 months, we should operationalize the hospital.
Also, Mr. Shah, just the manufacturing of implant segment saw a good growth, as much as 46% on a quarter-on-quarter basis. Supply side issues, are they resolved over there? And can we expect this run rate to continue going forward?
Yeah, so I think the implant business has done well on a quarter-on-quarter basis. We have shown a 45% kind of growth, in the implant business, and this has come because of both the US business and the India business doing well. So yes, it is on track. The supply chain issues are behind us, and we are working on newer kind of. So we are doing two things at the moment. One is, of course, working on launching 6 new SKUs over the next 15 to 18 months, to increase the product range. And secondly, working with a lot more number of vendors to kind of get our supply, sorted out. So, we are basically in that process, and you will see the results, in the coming few quarters.
Okay, Shania, thank you so much for joining in with us this afternoon on ET Now, giving us an understanding in terms of what is the outlook for the company going forward as well as the Q3 numbers. But let's move on and keep it going with all the stocks that are buzzing in trade on the back of news flows and technicals. And now on the technical front, we're joined by Ashish Kyal from Wave Strategy Advisor. Ashish, very good afternoon. Thank you so much for joining in with us. And Voltas, that's surely cooling off already in terms of the heat and run up that we're seeing there. What is it that one should expect from Voltas now? Given that summer season is coming, Voltas always sees some bit of a run up there.
Hi, and all the viewers. If you look at Voltas, the stock has shown a very decent run up already when it went from 850 levels to the high of 1100 and showed some kind of a pullback. I think it is now breaking out again on the upside. The stock was consolidating over past few days and getting ready to be moving back on the upside. The target is around 1150 levels, and on the downside we can maintain a stop loss of around 1015.
Keeping an eye on those levels for Voltas. Let's move on, talk about Tata Consumers. This one reported its numbers yesterday. Overall, you could say largely in line set of numbers that actually came in from Tata Consumers. And especially in terms of, when you look at it in terms of the growth, the revenue growth was much better than what other FMCG companies are reporting. They saw a growth of almost 9.5%. Profits, yes, a decline because of an exceptional item that came in on that front. India Beverages saw a growth of 8%. India Foods saw a growth of around 13% for the company. Margins also saw a very sharp expansion. Now, other than that, when you're talking about it, we also have a brokerage note that came in from JP Morgan. They're maintaining a neutral rating, target price of 1,000 rupees per share. They said that overall Q3 was in line. Margins were ahead of what the street was expecting. And new engine growth, that is something that continued their healthy revenue momentum, and India EBIT margin also expanded to a 3-year high of 15.5% as well. So all in all, yes, it has been a good number or performance that has continued. Only thing is that yes, tea volumes, that's seen a bit of a decline coming in, and other than that, when you're looking at it, when we spoke to the management today, they did highlight that growth business contribution could increase from 20 to 30% going forward, and they're aiming for a volume growth in high single digit and low double digits is the range that one could see for Tata Consumers. So let's keep an eye out on that today. A bit of a subduedness is seen in the stock. But let's move on then to the next stock, and another stock coming in from the Tata Group side. Ashish, you have picked out Tata Power. Are you expecting it to power up more in trade now?
Yes, if you look at Tata Power, it has done exceptionally well. The stock has rallied sharply on the upside, and there is no stopping even now. When we see some correction in the broader markets, Tata Power is trading near the high of the day. So overall trend remains bullish for Tata Power. We can expect the move to continue towards the level of 425 on the upside, and one can maintain a stop loss, or the support level for the stock is at 384.
Was stock number 13, Tata Power. Keep an eye out on those levels. But we're going to slip into a very short break, viewers. Don't go anywhere. We'll be back with more stocks after the break.
You're watching Market Fatafat on ET Now. Let's talk about Venky's. That one came out with its earnings earlier in the day, and if you look at the stock, At one point in time, it was trading low by about 7.1% or so. They've actually posted a loss in the quarter gone by. So on back of the huge loss coming in as compared to a profit, you saw the stock actually see a downward correction, and in fact it is set for the worst day in about 6 months, that is since August 2023, and also it is snapped a 2-day gaining streak on the fact that in the quarter gone by the stock has the company has posted a loss as compared to a profit a year ago.
Okay, let's move on and talk about DLF then. And Ashish, overall the real estate sector had seen a very sharp run up. Now in terms of DLF specifically, on the charts, what's DLF indicating? Could we further see a run up, or maybe time to book out some profits?
See, if you look at DLF, the stock is still managing to protect its prior low. It's not breaking down, and we can see it's trading near to the 52 weeks high even now. So overall trend remains bullish. I would rather use the dip if we get anything around that 820 levels as a buying opportunity. On the downside, we'll maintain a stop loss of around 790 and expecting a target of around 870 on the upside.
Alright, so that's a view coming in on DLF. Ashesha, let's put the spotlight on two candidates that have had a huge block deal today, and which are those?
Well, yes, Mankind Pharma is the first counter that we will talk about. The stock is up nearly 6.5%, in fact 7% as 5.5% today. Nearly 1.62% equity changed hands via block deals that took place today morning. And we also have Kalyan Jewelers, which is in focus, up 7% after 1.6% equity changed hands and 4 block deals that took place today morning. So both these counters gaining in trade today on the back of block deals.
Okay, surely keeping an eye out on that one. But let's move on and Ashish talk about Zydus Life. This one has seen an uptick of almost 23% in the last 6 months. Currently at 802, would you still suggest a buy?
Yes, if you look at Zydus Life, the overall trend for the stock is definitely bullish, and we can clearly see that it has been going very strong despite of the other stocks that are not performing. And I would consider it to be a buy even at these levels because stock is showing some momentum. There is no divergence yet on the indicator, and we can expect a move towards the level of around 840 on the upside. And on the downside, one can maintain a stop loss of 775, which is an important price action area.
Alright, so that's the take coming in on Zydus Life. Snehi, Power Grid, this one also came out with its earnings, isn't it?
Absolutely, Cheryl, on the back of earnings, and the street is taking the earnings rather well. The stock has been doing well today, 5% up as we speak. Revenue has come in at 11,550 crore versus 11,262 crore, a 2.6% uptick coming in on a year-on-year basis. Net profit is also up 10.5% at 4,028 crore versus 3,645 crore. EBITDA has also gone up 3.2%, coming at 10,213 crore, and EBITDA margin also slight bit of an expansion also seen on that front at 88.4% versus 87.8% on year. Now, the company has also gone ahead and announced an interim dividend of 4.5 rupees per share, so that's 4.5 rupees per share. So the street is taking these numbers and this announcement of the interim dividend rather well, and the stock is up 5%.
Okay, that is Power Grid for y'all. But let's move on and actually talk about some earnings candidate. We have Vimal. I believe KEC International's management is joining in with us. This is on the back of some orders that are there. So let's actually bring on board Mr. Vimal Kejriwal, who's MD and CEO at KEC International. Thank you so much, sir, for joining in with us. You've already lowered your order inflow guidance to 22,000 crores from 25,000 crores earlier. Now, with the 14,000 crores YTD order inflow so far, are you confident of adding 8,000 crores order in other 2 months to meet the guidance?
So if you look at our L1 numbers, we are around 7,000 crores of L1 also there in that number. So we do expect that a large part of it will get converted. Plus, there is a tender pipeline, especially on the TBCB side, that's on the Power Grid and others. And also on the civil side, we have got a few discussions which are going on. So I think we should be reasonably around there. Okay, I don't see a miss by a very large point, but there could be 500 crores here or there. But I think we are pretty okay with that number.
Good afternoon, Mr. Kejriwal. This is Cheryl also joining in the conversation. We know about the transmission and the civil business potential, but if you could talk to us about, especially about the solar EPC, the business potential that's in store for your company in particular?
So right now we are doing one large project of around 600 megawatt. Today we announced some smaller ones, but there are pretty large numbers. If you look at what government is talking about, is we have now 180 gigawatt. We are talking about 500 gigawatt by 2030. So because of that, a large number of projects are coming up. And I think what has also happened is that we are seeing a relative stability in the whole policy part of it, and also on the duties, etc. Typically, we do not take modules as our supply, and I think the developers have also realized it. So most of the projects which are now coming are without the module, which is the most volatile. So we are clearly seeing large opportunities coming. And also, if you look at the number of players in the EPC side on solar, you can count them on your fingers. There are maybe 4 or 5 of them. So I think there is a huge opportunity which is there and which will continue.
So just in terms of your margins, they've been a bit on the weak side. When do you expect and see the margins improving, especially coming back to the double digits?
So one thing is that in the last 6 quarters, the margins have been improving quarter on quarter. And this quarter, if you look at it year on year, we are up by 160 basis points. My view is that next quarter, that's Q4 also, it will go up. What we had earlier talked about was slightly higher for the year ending, but let's say exit. But now I think we are looking at around 8% or something at the exit. By next year, I think we should be close to 7-8% margin next year. And by exit next year, FY25, we should be at close to double digit or maybe double digit.
Right. Sir, let's talk about the guidance of about 15 to 18% sales growth in FY25-26. Are you still holding that sort of a target coming in the forthcoming year for your growth?
It's a little bit early to say whether we can improve it or not. 15 to 18, I think 15 is what we have guided. In any case, I don't see a major challenge, because if you look at our order book today with L1, we're close to 38,000. And unlike many of my competitors, our order book doesn't have, large civil projects which are running into 5 years, 6 years. So typically, our project cycle times are 18 to 24 months or something. So even with this current order book, I think growth is not is the least of my worries today.
Okay, thank you so much, sir, for joining in with us this afternoon on ET Now, giving us an understanding in terms of the order win as well as the outlook in terms of margins going forward as well. But with that, we are absolutely out of time on this edition of Market Fatafat. It's a goodbye from Cheryl, myself, as well as the team who put this show together. And thank you so much, Ashish, Nirav, Snehi, and Ashisha for joining in with us.